Good afternoon, good morning, depending on the location that you are. Thank you very much for coming to this webinar today, upcoming changes to the BVI Business Company Act, the impact on its appeal for Brazilian families investing internationally. Well, first of all, my name is Álvaro Becerra. I'm one of the partners of UMA Wealth. Let me introduce today, first of all, the subjects and the speakers. So the speakers are Juan Quesada, a lawyer from Conyers with relevant and significant international experience in corporate mergers and acquisition. He will update us with the new changes of the law in the BVI that will affect obviously all the international users of this widely used jurisdiction. Secondly, is coming Charlie Wilcox. He's a UMA collaborator. He has a tremendous experience in FATCA and CRS, advising relevant families all over the world. And he will give us, the new update in terms of transparency, CRS, and FATCA. And finally, we have the partner of Machado Meire Abogados, Fernando Colucci. He is an international tax expert. He will tell us, how these new changes will impact Brazilian investors. And finally, we're going to have a panel discussion that we will appreciate if you can be extremely proactive and ask the questions to the different speakers. So now we'll start the event starting for Juan, who will give us, the updates in the BVI.
Thank you very much, Alvaro, for that introduction. Good morning and good afternoon to everyone. As you know, the BVI has introduced some amendments to its legislation, which will come into effect as of January 1st, 2023. There are several changes that are coming into effect. We're going to focus today in the most important changes that affect all of the BVI companies which are of interest to every BVI company, especially in respect of the requirements for filing annual returns, the new requirements in respect of striking off, the new rules applicable to liquidators, and of course, one of the most popular topics, which is the ability to now see the names of the directors in the public registry. So we're going to go right into the financial returns. Next slide, please. Let's go next slide. Thank you very much. So as you know, historically, the BVI has never been a jurisdiction to require much more information than the records of underlying documentation and transactions that the company carries out during the year that will enable that particular company to determine its financial position. This has been the requirement for the last 25 years or more. This also has never been something to require the companies to keep the information in a specific location. So the directors would normally indicate the address where this information would be kept. Now, the biggest change that is coming into play is that as of January 1st, all BVI companies in existence must prepare annual returns, which will include a financial statement, a balance sheet and a profit and loss account. It's important to note that this information must be kept at the office of the registered agent, and the registered agent has this new obligation to inform the BVI registry if a particular company is not complying with providing the information. So we see there are several changes that are taken into place that will affect the BVI company, and it is important that all of the companies and all of the directors of the companies are aware so that they can comply. So if we take a look at the proposed timeline for the implementation of this change, is that January 1st, a company should already have a financial year end. And this is one of the first practical issues that we encounter, which is, since this was not a requirement prior to the coming into effect of this legislation, companies may not necessarily have appointed a financial year end. The second element is that the company might not have financial statements or might not have appointed an accountant. So the company should also consider appointing an accountant, or outsourcing the service to its service provider if possible and as applicable. So some of the, going back to the timeline, sorry, the financial year end could be the calendar year, which puts the company in the best possible scenario, because it means then that as of January 2023, the first financial year for the annual return starts to count, which would end at December 31st. And then the company will have 9 months to submit those financial statements to the registered agent. The other possible scenarios where companies have already established a financial year end of March 31st or June 30th would potentially put the company into the filing requirement within the year of 2023. There is an ongoing discussion at the moment, but it is more than likely that this requirement of filing will actually be applicable as of 2024. In any case, the most important point for the service providers and the directors of the companies is to make sure that the BVI companies that they administer or they manage have already appointed a financial year end. Our recommendations to clients who haven't done anything as yet is stick to the calendar year. You might also want to consider, if it's a company that has to comply with economic substance requirements in the BVI, to align both the financial period for economic substance purposes and the annual financial return period to the same calendar year. That way, that information that is obtained for the annual return is applicable for the economic substance filing. Next slide, please. Some of the other practical considerations in this case is that, number one, this information will not be accessible to the public. This information must only be filed with the BVI registered agent of the company. However, this information will be accessible to the regulator should the regulator require for the same. Additionally, as mentioned, the BVI registered agent now has a whistleblowing obligation, which is within 1 month of the company failing to provide the financial statements to the BVI registered agent, the registered agent has that obligation to inform the FSC and the registry that the company has not complied. And this will then in turn result in a potential penalty for the company, which can go all the way up to $5,000, depending on the time for the non-compliance, and the potential strike-off. We're going to be covering the point of strike-off in a minute, but just to keep in mind, this could mean that the company would eventually be dissolved for non-complying with this new statutory requirement in the BVI. And as always, there are exemptions that apply for obviously public companies because that information is already available for the public, and for those companies that have a license under CEBA, for instance, or they're regulated under financial services licensee requirements, which means that they already provide and prepare financial statements. Another important point, I think I mentioned previously, these financial statements do not need to be audited. Next slide, please. Now, on the second topic of the changes that will be applicable as of January 2023 is the access to the names of the directors. There is also a consideration in this particular case, because as you know, from the current requirements in the BVI, the information of the directors is filed with the public registry. This information is not currently available, but the registry does have access to the name, the address, the place of birth, date of birth of the directors. Now, the registry is currently making the necessary changes to their system to allow for a public search to give a listing of the current names of the directors for the company which is being searched. In other words, once a public search is done to a BVI company as of January 1st, 2023, the person carrying on the search will be able to see the names of the current active directors for that particular company. It is important to note that the search has a cost of $75, which is intended to take away any potential bulk filing or fishing expedition to find out information. And it is also intended for the names of the directors to be shown in isolation per company. So in other words, it is not possible to do a search per individual and find out how many companies that individual is associated to. but rather you would have to do a search on the particular company and you will see the names of those companies. There might be directors that have a particular concern about their name being represented in the public registry, and there's always the availability or the option to use a BVI corporate director, which in turn would show the names of the directors of that BVI public and BVI corporate director if reviewed, which are normally people who are placed in the BVI and work for the different financial services providers locally. Next slide, please. Next slide. Seem to have a little bit of a technical difficulty, so just let's allow for 1 minute. Thank you very much. Now, striking off and dissolution. We know that the current scenario means that a company that doesn't pay their annual license fees and goes into a penalty is eventually struck off. If that company remains struck off for a period of 7 years, then the company will be dissolved by operation of law. The new requirement or the new policy that is being applied by these amendments to the legislation is that there will no longer be a 7-year period of striking off or limbo for the company. Companies will now go into automatic dissolution once they're struck off. Now, this is both good and of a particular concern because of the implications that this have in terms of having a company restored. So on the one side, the companies that would traditionally, or the directors that would traditionally consider not having to do a formal liquidation process, and sorry, the next, yeah. So the companies that would consider not having a formal liquidation process because they just felt that they could abandon the company, will be able to take on this route from now on, and will know that once a company doesn't pay the annual license fee, it will be automatically dissolved, and then that company will not be able to be restored after 5 years of being dissolved. So this eliminates that previous waiting period of 7 years and then the additional 10 years for the company to be restored. Now, on the not so positive side, if a company fails to pay the annual license fee, and this is a very common issue that we see among different service providers, then the company will be dissolved. We've seen different scenarios of clients that reach to us to require assistance in restoring a company by court order. Normally, their number one complaint or consideration is that they'd never heard from their previous registered agent, or there was an intermediary involved and the invoices were being sent to the wrong place. It is extremely important now that every single BVI company considers and knows that they have to pay their annual license fee on a timely manner. As mentioned, there is a possibility to restore a company within 5 years of being dissolved. However, this process is not only costly, but will entitle the FSC and the registry to actually oppose to the restoration in the first instance, and will require a declaration from the current registered agent that the company is up to date in all of its KYC and records. Sometimes, as you may know, it could be quite a daunting process to backtrack everything that was done during the period that the company was dissolved. So it is extremely important that the companies really make sure that they pay their annual license fees on a timely manner. An important note as well here is that any company that is currently struck off will have a transition period of 6 months until June 2023, which means that you're still in time to contact your current registered agent and make sure that your company is in good standing if you haven't paid her. Or if you're considering to let the company lapse, then just reconsider that 6 month of transition period until the company is completely dissolved. Next slide, please. The final point that I would like to touch on today is in terms of the requirements for liquidation. So now we've seen that if a company doesn't pay its annual license fee, it will be automatically dissolved. Now, for those companies that opt for the formal liquidation process, there's a new requirement applicable to who is able to act as a liquidator of the company. Normally, any person that is not a director or directly related to the senior management of the company could act as a liquidator. Now, there's an additional requirement for that liquidator to be resident in the BVI and to have the relevant experience and qualifications to act as a liquidator. This means that no longer would it be possible for a company to appoint someone within the organization or someone, an external service provider that is outside of the BVI. That BVI company has now to get in contact with a local BVI liquidator in order to be able to process the liquidation process. This means, of course, then that the fees associated to the liquidation process might see an increase on behalf of the formal liquidators or the service providers local in the BVI. Next slide, please. So those were the most important changes that are applicable to every single company in the BVI. There's some additional changes in the legislation that are coming into effect. And some of these are mentioned in this slide. First of all, the re-domiciliation to other jurisdictions. It continues to be a process that is fairly straightforward. However, as of January 1st, there's a new requirement to publish a notice in the Gazette for 14 days before the intended date of discontinuation. So the companies now have to publish a notice and make sure that they inform their creditors or potential creditors via this publication in the Gazette. The legislation speaks about an approved form. Unfortunately, the form is not available as yet. And we will definitely make a comment in respect of what is the approved form once we've heard further from the registry. But it's important now that if any companies are intending to re-domicile early 2023, they will need to take into consideration this re-domiciliation period. There's going to be new requirements for charitable and non-commercial companies. There's really no need to go into detail for those because that's something quite niche. We're always happy to help. So if any clients have any particular companies and questions in regards to these companies, you feel free to reach out and we'll be happy to guide you accordingly into these. As for bearer shares, they're finally being abolished. I mean, it's been discussed in the BVI that this type of shares are disabled for quite some time. They're finally just being abolished completely, so there's no additional consideration for them. And then the final point, which is in regards to the registers of persons with significant control, or the so-called the public register of beneficial owners. As you know, there's a lot of movement in the international arena in terms of what is acceptable. The EU recently made the EU courts made a judgment in terms of being something that affects directly the right of privacy. I'm going to introduce my fellow colleague Charlie, who's going to be able to speak a little bit more about these new requirements, particularly from the point of view of FATCA, CRS, and economic substance. Charlie?
Thank you, Juan. And thank you for that sort of introduction, Alvaro. Thank you also. Good afternoon, everybody. Good morning, again, depending on where you are. Yeah, my role in life, I'm a consultant dealing with transparency issues, primarily FATCA and CRS, but also increasingly the beneficial ownership registers that Juan's just referred to. What I would like to share with you this afternoon is how people generally don't understand the requirements of the automatic exchange of information, FATCA and CRS. And I started off there with that slide saying myth versus reality, particularly where individuals directly own entities, companies, and or are the directors of those companies. There is a perception that it is nothing that I have to worry about. I don't understand the terms. I'm certainly not a financial institution because I'm not a bank. And anyway, anything needs to be done. It's the banks that do all of this. Unfortunately, that is the myth. The reality is every entity, which is widely drawn and which covers legal entities, corporates, it covers legal arrangements such as trusts, partnerships, and the like. every entity has an obligation, or its directors or controllers do, to firstly classify that entity for these purposes. And this is not an easy exercise. There are terms in there, as I just mentioned, like financial institution, which people associate with banks, with investment managers, and so on and so forth. But each entity can be a financial institution. In the case of a BVI company, for example, typically these will be holding investment portfolios and the like. Now, it may be that the director is an individual who may also be the shareholder, but it could be the portfolio is managed completely or in part on a fully discretionary basis. If that is the case, it is quite likely that this entity will be a financial institution, as described in the rules. And that in turn brings obligations, further obligations, onto the directors of the company. Because if that company is a financial institution, it will have due diligence and registration and reporting obligations. What will it have to do? It will have to identify what are its deemed account holders. And under these regimes, an account holder will be a shareholder of any amount of shares. So it could be 100%, it could be 0.1%, it could be 50%, it doesn't matter. Any shareholder will be an account holder and will be reportable as a consequence. Similarly, so the due diligence requirements are to ascertain from each account holder where they live, where they're tax resident, what their tax number is, so that the reporting requirements can be met. The entity itself will need to register on a reporting portal and will need to submit those reports. Now, some portals allow you to input manually, which is relatively easy. However, others require you to produce files in a particular format called .xml, and you would need a generator to convert such a file so that you can submit it. So in short, you need to understand, how am I classified in the first instance? If I'm a financial institution, what do I need to do? What due diligence do I need to do on my account holders? Who are they? And then I would have to report them. In any event, I would have obligations to third parties, typically banks, to confirm to them as to what type of entity I am, what classification I have. If that changes, I would have to notify them within 30 days. Now, that's fine, but you can see that there's obligations on you which are not as straightforward, and you cannot just leave it all to the banks. In many instances, that said, the banks themselves, because of the nature of the entity and its control mechanisms and what it holds in its portfolio, it will not be a financial institution. And in general terms, it will be the banks who will do the reporting. However, in that scenario, as the directors of the company or as the owner of the company, you may well wish to know what the banks are doing, who they're reporting, what they're reporting about them, to whom they're reporting it. And banks generally will not do this unless you ask them. So you're completely blind to what the banks may be reporting in those instances. So it is important that you understand what the banks are actually reporting and that you are comfortable that what is being reported is valid and correct. Okay, that really is all I want to say about automatic exchange of information. So it's understanding how your entity is classified. That is the driver. And this is what I advise families on in terms of their structures. So again, if you have any issues on this and you feel the need to reach out or get comfort on this, then please do not hesitate to contact me. Okay, Can I have the next slide, please? Beneficial ownership registers, or registers of persons with significant control. The Crown dependencies and overseas territories of the United Kingdom, of which the BVI is of course one, have long been, shall I say, resisting having beneficial ownership registers. As Juan has alluded to, there is a greater and greater driver for transparency. This has come about because people have taken the view that offshore structures may well be used to hide proceeds of crime, these sorts of things. And it has long been touted that having a public register dissuades or might help dissuade people, criminals, from using such structures. Whether one agrees with that or not is immaterial. The fact of the matter is they've been brought in, more and more jurisdictions are bringing them in, and the BVI has information on beneficial ownerships which are maintained solely by the registered agents, who are required to input that into a centralized system. But there's never been a public ownership register. Now, the overseas territories, BVI included, were going to be compelled by the UK to make them public, and had undertaken to do so by 2023, i.e. next year. As Juan's alluded to, the European Court of Justice has recently given a judgment which says having public registers per se is an invasion of people's natural rights to privacy, and it's not proportionate to the aims of these registers. So that was an interesting judgment. What has happened since, and what is now coming to the fore, and it will be interesting to see which way this goes. But there has always been the ability in some jurisdictions which didn't make them public to the general public, and not all of them did. There was always the ability where one could demonstrate a legitimate interest in having access to the information. Now, the reaction of the European Commission to the judgment of the European Court of Justice was to look at this again and to better determine what they feel is legitimate interest. Now, the way this is going, or seems to be heading, legitimate interest is being looked at as being obviously law enforcement agencies. Well, that's fine, and I think nobody would necessarily argue with law enforcement agencies having access to beneficial ownership register information. However, others are considered to be journalists and also quasi-governmental or non-governmental organizations that have an interest in money laundering or anti-money laundering, I should say. So people like the FATF, for example, it will be people like Transparency International, these sorts of bodies or organizations. So the interesting thing here is how much actually does it change things? Yet to be seen, I think, as to how it all pans out. But if one assumes that persons with legitimate interest could still access it, and some persons, such as journalists, are deemed to have legitimate interest, if they can meet whatever criteria is required, then they will have access to the information. Now, whilst there's been a lot of hoo-ha, if I can put it that way, about the things being open to the general public, I wonder actually if the judgment by the European Court of Justice really changes an awful lot, because I rather suspect that the general public is not going to be trawling such registers even if they could. So it was always going to be likely that investigative journalists, other organizations would be the ones that would require access. So whilst there may be a victory here, if you like, in the interests of privacy, I'm not so sure ultimately down the road things will actually change that much. We shall have to wait and see. In terms of a beneficial owner, generally speaking, that is any person who owns or controls directly or indirectly the shares in or the voting rights of the shares of a company of 25% or more. That is the general rule. Some jurisdictions, it's slightly less. The information on there will again, and certainly for the BVI, will be name, address, date of birth, and nationality. Yes, the register was going to be public, but we wait and see. The point here for companies and the company's owners and directors is they have an obligation to maintain the information. Okay, so that's that. In the interest of time, I'll move on. If I can have the next slide, please, and I'll just go through very briefly economic substance. Economic substance was really all about what was called base erosion and profit shifting, i.e. the large conglomerates moving profits offshore to lower tax jurisdictions and the like. And these rules were brought in really to counter that. Unfortunately, for owners of BVI companies, private investment companies, these are often caught by virtue of being what they call a holding entity, if they are purely equity holding entities. So if you hold an equity portfolio or the shares in an underlying company and nothing else, then unfortunately you're caught, although the BVI has sort of reduced rules around this. There is need to have a declaration. There is a need to provide certain information in terms of the activity, the turnovers of that activity, and the like. So really, I won't dwell on that. As I say, it's in terms of time. Again, any more information required, but the point is there is reporting that has to be done, and directors of companies need to be aware of this and the timeframes for doing that reporting through the registered agent of the company. Okay, with that, I would like to hand over to Fernando. Fernando obviously is a man on the ground in Brazil and has greater understanding of how Brazilian entrepreneurs and wealthy families use BVI companies, and to lead the discussion on what his views currently are around this.
Okay, thank you, Charlie. Hello, everyone. So my role here will be to speak a little bit on the latest developments we had in relation to changes in the legislation that could impact the PICs, and also what we can expect for next year. What would be my recommendations on the SPVs, if this is still a vehicle that should and could be used by the Brazilian individuals. And then I'll have a brief discussion with Álvaro. Álvaro will bring interesting comparisons with other Latin American countries, what clients are doing there, so we can compare here what we are seeing here in Brazil. So in the next slide, I brought here one important element that we had last year. I'm sure that most of you have heard about this. Last year, President Bolsonaro proposed a tax reform related to income taxes. This was aimed at changing very important rules related to Brazilian legal entities and to Brazilian individuals. As to the Brazilian individuals, this was the last attempt to introduce CFC rules for Brazilian individuals. As we all know, currently, Brazilian individuals holding investments in companies out of Brazil or in funds should not be taxed here in Brazil until we have an actual distribution of dividends, of profit, or until we have a capital reduction. We had an attempt, the last before this one was in 2013. So last year we had again a change, a potential change in this, aiming at imposing the CFC rules to individuals. So individuals holding investments in BVI companies, for instance, would need to pay taxes here in Brazil at the end of each year, regardless of the distribution. This was reviewed by the Brazilian Chamber of Deputies. This proposal is specifically related to CFC rules was written off right in the first round of analysis. The bill was approved by the Chamber of Deputies, but was never reviewed by the Brazilian Senate. So we don't see real chances of this one proposal be again discussed by the Brazilian Congress. What we saw, we had lots of discussions last year on this. Clients were following this very closely. Of course, this is very important. The tax deferral is for sure one of the important elements related to investments in PIGs for Brazilian individuals. But we didn't see actual decrease in the use of these foreign structures. We here don't recommend clients to change their structures based on a proposal, based on a bill. So we just followed and we didn't have any changes in this regard last year. You all know that this year we had the presidential elections here in Brazil. In the next slide, please. I brought here what I see being discussed, what we can see next year. So President Lula was elected. He already said during his campaign, and now last Friday, we had Fernando Haddad being indicated as the new Minister of Finance. In his very first speech, he said that the tax reform will be a priority of the government. He didn't bring actually details on this. We have discussions here in Brazil on tax reform very broadly. So we have potential tax reforms related to consumption taxes, so the Brazilian VAT, ICMS, and we also have these discussions on the income tax changes. So we don't actually know what they are targeting here, but they said that the tax reform will be a priority for next year. What we take almost as a certain thing is that we may have taxation of dividends distributions carried out by Brazilian legal entities. This is something that we really expect to happen next year. The extinguishment of what we call here juros sobre capital próprio, interest on net equity, may also come along. And these two other discussions related to Brazilian closely held funds and the CFC rules for Brazilian individuals, we do see some discussions, but at this point, we cannot say that it is likely to have these changes next year. Of course, we need to keep focusing and following these discussions. But for now, as we did last year, I wouldn't recommend any changes in the structures that clients have. In the next slide, I bring some comments, and then we can move to discussions with Álvaro. My view here is that, of course, privacy is important, but privacy is not usually the main purpose for clients, for Brazilian clients adopting or using the PIGs in BVI or any other jurisdiction, because here in Brazil, we need to report those structures to the Brazilian tax authorities annually, and also to the Brazilian Central Bank. And we have very important criminal and tax consequence if you don't, if you're not compliant with this legal imposition. So all clients here in Brazil, my clients are compliant, especially since the voluntary disclosure we had in 2016. So clients do report their structures to the Brazilian tax authorities. They do their financial statements to report to the Brazilian Central Bank. So they are used to this. They are doing this for the last 5-6 years. So it is important, but it's not the concern here. As to the tax deferral, of course it is important, but this is not the only advantage we have for the BVI structures. The asset protection is also an important element here. So even if we have a potential creditor knowing that a certain Brazilian individual has this structure in BVI, either via having access to their income tax return here in Brazil or to the public registers in the BVI, to have actual access to those assets, creditors would have challenges. So it's a recommendation to have these investments not only here onshore, but also offshore, and BVI is one of the most important jurisdictions that we see clients investing. The other important element that we have related to the PICs is what we call the portfolio approach. If I have a Brazilian resident and I have financial investments being held directly by me, I will have a gain. I'll need to pay taxes monthly here in Brazil. I will have a loss. I will not be able to offset that loss against the gains I had. If I have those investments via a BVI company, naturally the losses will be absorbed by the gains, or the gains will be absorbed by losses. And even if I had the CFC rules, I would need to pay taxes only over this final result, and not only over the full gains as if I had the investments directly by the individual. And also important changes, even if I had the CFC rules being imposed here in Brazil, I would need to pay taxes only once a year and not monthly as I have if I would hold those investments directly. And also for succession planning, some say that this could be a potential alternative for circumventing the Brazilian forced heirship. This is very controversial here, but this is something that some also take into consideration. So what I usually say to clients is we need to investigate and see which would be the elements that are relevant to clients, then to seek and define which would be the most important or the most suitable structure. For most of clients currently here in Brazil, using the PICs, using the BVI structures is still an important element that will protect most of the interest that the clients have. Of course, some clients have other needs, and maybe the BVI PIC may not be the structure to recommend, but for most clients, this is indeed the structure that we recommend and that we see in place here. And just a final comment here is that although here in Brazil we have the legality principle, so any tax imposition should arise from law, and we don't have any legal rule stating for a substance over form approach, we do see the Brazilian tax authorities taking this substance over form approach and claiming whenever they see that there's no economic substance, there's no business purpose, they simply disregard the structure and they impose the tax consequences as if which would be the real intention of the parties. Here, what the potential risk we would have is if I have a BVI company that doesn't have enough economic substance, for instance, we could have Brazilian tax authorities simply disregarding the company and imposing taxation as if investments were held directly by the individual. So it wouldn't be a CFC rule per se, but would be the same impact as if we had a CFC rule, or even worse, because they would not observe the portfolio approach that I mentioned. So the simple recommendations we have and we pose to clients is you should ensure that the company is autonomous and is independent, is a separate entity from you. So you should not use, and it is unfortunately common to see, you should not use the credit card issued for the company for personal purposes. You should avoid any transactions that could be construed by tax authorities as a sham. For instance, instead of having a dividend distribution, I'll have the company loaning amounts to me, interest-free, and I'll never pay back those loans. This could be disregarded by tax authorities. They could say, even if they respect the BVI company, they would say, oh, this is a disguised distribution of dividends, so this should be taxed here in Brazil. And of course, finally, recommendation would be to keep reporting on time, either to the Brazilian tax authorities and to the Brazilian Central Bank. These are very easy to follow recommendations, and once they are observed, I would say once again that these structures would be very suitable to most of clients. Now I think we can move to our discussions and listen to your comments, Alvaro. Thank you.
No, thank you, Fernando. Very clear. As usual, we expect so much about Brazil, but it seems to be that we will remain, without any significant changes. But having into account the new changes that they were here described in details by Juan, in terms of transparency, in terms of having access to more information or filing the financial statements, since that for the Brazilian clients will not be a big change because they already, because they need to declare, the foreign asset, they need to have, annual accounts. So apparently this will not, drive major changes to the Brazilian investors. So if you can comment on this, Fernando.
Yeah, that's it. So clients that are compliant, they do report to the Brazilian tax authorities, they do report to the Brazilian Central Bank. So this wouldn't be a significant change from that perspective. Of course, nowadays, if I am a creditor and I want to, I wouldn't know that if my debtor has or doesn't have these structures in BVI. This is not public. Once you file to you report to the Brazilian IRS and to the Brazilian Central Bank, this is not public here in Brazil, but I could ask for a judicial order to disclose those information and see if the debtor has any other assets that I wouldn't be aware. But even if I had access to that information, and I understand that next year this might be easier accessible, for instance, but it still would be a protection to this debtor, to this Brazilian individual, because this creditor would still need to go through a litigation in the BVI. So it's an additional layer of protection that we'd have in those situations. So I would see that it is still protecting this interest of having this additional layer of protection to clients, Alvaro.
Thank you, Fernando. I'm going into a different subject that is always quite significant in the other Latin American jurisdiction as well. It's about the implementation of trust structure, because in most of the other countries we have some experience, also interpretation from the tax authorities. Might be that the case that, if the Brazilian tax reform go for CFC, but you mentioned it's really unlikely to happen. But also there is a discussion of wealth tax, which is also a discussion now in Mexico, in Colombia, in Chile, and might be in Peru. We don't know what is happening in Peru now. It's a lot of changes lastly. But we would like to understand also which is the position in Brazil in respect to trust structures.
Mm-hmm. Yeah, trusts are a very interesting tool. I do like trust structures very much, but unfortunately, it is surrounded by lots of potential controversies from a Brazilian standpoint. So trust structures is not my first choice, I would say. But as I mentioned before, we need to understand the client and see which are their needs, which are their priorities. If their priority is tax, maybe the trust would not be the first choice, because the Brazilian tax authorities take the view that, first of all, they don't actually know what is a trust. This is our feeling here, because we are a civil law country, and we don't have this structure here in Brazil. But their position is, whenever you have a Brazilian beneficiary receiving trust distributions, the full amount should be subject to income taxation here in Brazil. So it's not the gain, it's not the foreign exchange gains. The full amount should be taxed here in Brazil by the individual as a foreign ordinary income. This is very aggressive from tax authorities, because our income tax rate here for ordinary income is 27.5%. So if you had a Brazilian that was the settler and once paid taxes over his earnings and then sent this to the trust, and then the trust distributes to the beneficiary, taxing this again would be certainly a double taxation, at least on a portion. But for other clients, so this is not our view, but definitely this is the view of tax authorities. That's why I say that if clients want tax certainty, maybe the trust wouldn't be an option, or at least not the first option. But in several other situations, having the trust is really important, and in several situations, it is the only alternative that we have to meet the client's requirements. So it is always a case-by-case analysis, but trust, we always have this controversy. And just a final comment on trust structures is that usually Brazilian clients implementing trust structures, they have the revocable trust. And the revocable trust for Brazilian tax purposes, although we don't have any rule on this, but we would see this as a transparent entity. So if I have a trust, a revocable trust that holds a BVI company, for Brazilian tax purposes, I would consider as if the settler still had the investment in the BVI company and not the trust. So to have this actual segregation, we need to go to a irrevocable trust, what is not very common to have clients, Brazilian clients, accepting this kind of structure. So this would be my comments here.
No, thank you, Fernando. And I have a question now for Juan in respect to a trust structure, because you made a detailed review about the changes for BVI companies, but there is any changes to the BVI Trust Act in respect of transparency or identification of the beneficial owners, as well as being discussed in another jurisdictions?
At the moment, and particularly with the amendments that are coming in January 2023, there's no specific change that would be different from what we already know and what was discussed by Charlie previously in respect of FOTCA and CRS. So it is always important to know that, you know, if there is a trust as part of the structure, then there is a distribution, then a filing needs to be made. Even if there's no distribution at all, then a nil filing should be made, but that has to be done. So if you're using a trust structure, it is important that you have a professional trustee that knows what are the requirements and what needs to be done. Another one of the additional requirements that are coming into effect, but as part of AML and the regulatory code, is the TIN information. So more and more, the BVI is requiring for the professional trustee to have policies and procedures in place that specifically deal with collecting TIN information and with complying with automatic exchange of information rules. So if the client is the director himself of a BVI company and they have a Vista trust, you know, this is a structure that, as Fernando mentions, could potentially be challenged because the director has the control over the company where the assets are located. And so this is a structure that's not necessarily looked at for the purpose of taxation, but it's actually for the purpose of succession. So it's important to keep in mind. But other than that, I think that if you're using a professional trustee that is aware of the requirements, all you're going to be seeing is additional questions being asked around where are the assets, what is the tenant information for the vested beneficiaries and for the settler, and compliance of the annual filings that need to be made. I don't believe that the tenant information is being voluntarily shared at the moment, but it's something that it's definitely coming down the line, because as trustees, we have to have that within our records.
Oh, thank you, Juan. And now I have the last question. I will ask this question to Fernando, but will be linked to the presentation of Charlie, because Charlie mentioned about, to classify properly the entities for FATCA and CRS purposes. And it seems to be, it has been underestimated, the way and the complexity, how to classify entities, also linked to the economic substance, requirements. So maybe you have many holding companies in the BVI, or companies and in the BVI executing loans, transactions that could be, classified as finance companies. So how do you see the market in Brazil? How do you see that people, if they have, the technical capabilities to understand and to classify properly? Because in most of these entities, the directors are the clients themselves. So they're not professional directors that probably will be more equipped to understand properly these classifications. So if you can tell us about your experience on this subject.
Yeah, what we see here, Alvaro, is very much as Charlie mentioned. We see clients that, as you said, they are the directors of the company, owners and directors of the company. And usually clients don't see this as a problem of them. They think, oh, this is simply a PIC, this is simply a holding company. It's not my business to have this kind of classification. It is on the bank's shoulder. So this is, I don't see clients being really concerned about this. And as Charlie mentioned, this is really important to be aware of.
Okay, thank you, Fernando. There is the last question from the audience. This is the last that we can accept, but probably the only one that we have is about if Machado Meyer has a legal opinion on PPLIs or life insurance products. If you can tell us.
We have two potential controversies involving PPLIs and foreign insurance products. The first one is related to regulatory aspect. I'm not a specialist on this, but I do know that we here understand that, yes, you could have a Brazilian individual contracting this kind of insurance via a foreign vehicle. So it could be via his BVI, for instance, contracting this life insurance. This would be compliant, in our view, with the Brazilian regulatory rules. And the second discussion is for tax purposes. Based on the current legislation, we don't have taxation on life insurance payments. And then the discussion would be whether PPLIs would be viewed by the Brazilian tax authorities as an insurance, or more closely as a financial investment. This is something that we don't have clear answers to that. We would need to review the product itself to see if, from the Brazilian perspective, we have the same qualification as insurance. Basically, if we have any kind of risks involved, or if it is only similar to a financial investment. And this discussion was also raised last year in relation to the CFC rules, whether or not this would be an alternative to BVI companies when we had the CFC rules. This will all depend also on how the rules come, because when we had the attempt that I mentioned in 2013, for instance, Brazilian foreign funds should be out of the scope of the Brazilian CFC rules. And in that situation, we had some clients moving to foreign investment funds. The last proposal adopted a more broad wording and was mentioning non-personified entities that we don't know actually what it is, could reach trust, could reach even this kind of structure. So this will depend, one, how the rules come, the wording, and two, the details of the products. But yes, I see that this could be, foreign life insurance could be an option for clients keeping the tax deferral here in Brazil.
Thank you, Fernando. And I think that this is the last question because we really ran out of time now. It's for Charlie. So it's in respect to the new Transparency Act in the US. So how you see that this might be affecting, offshore companies or companies in the BVI that they currently they hold positions in the US?
Well, the US rules will cover US entities. So it's the same principles, if you like, as the existing registers elsewhere, which the US had never had before. Clearly, where you have US investments, if you're a BVI company, you have US investments, then any reporting that's done will be done from the BVI, but not about the US investments themselves, but about the individual account holders. The US investments will only form part of the balances reported. So really what the US is doing is not relevant here as such. It is merely just another beneficial ownership register of a type. My understanding is that there will be certain public access, but I don't think that's been properly defined as yet as to what it actually is.
Thank you, Charlie. No, I think that there are no more questions. So thank you very much for the audience. Thank you very much to the speakers, Juan, Charlie, and Fernando. And let's see you next time. We're going to share the presentations by email later on. And also will be a translated version in Portuguese for Portuguese speakers available as well. Thank you very much. Have a good day. Bye.
Thank you.